What's good, traders? Welcome to day number 22 of the bootcamp. If you're new to the bootcamp, make sure you like and subscribe and be part of this journey. We've been going through every single day, teaching you more value. Now, let's do that again. 3, 2, 1. What's good, traders? Welcome to day number 22 of the bootcamp. If you're new to the channel, make sure you like and subscribe. And today we are going to be talking about psychological levels. These are levels that can help you identify pivotal points in the markets, okay? And the thing about this is a lot of people draw supply and demands, a lot of people draw support and resistance. But the thing is, right, is you can draw so much support and so much resistance, and it will become very confusing. And let me just show you for examples, right? We're on the 50 minutes. Let's actually just go on the 4-hour chart for a second, okay? And just to show you guys, right, just off the bat, I can see, this is a level of resistance, right? Why is it level of resistance? Because price came to this level and dropped, right? Then we had another level of resistance here, right? Price came to this level and dropped. Then we have another level of resistance here, right? And then we have another level of resistance here, right? Then we have another level of resistance here, which kind of got knocked out by this candlestick. And then now we have a level of resistance here, right? And so looking at that is already so confusing, because it's like, if we did have, let's say, price decided to reverse and now it's creating new let's say levels, right, and then it's going up, are we saying that we're going to target like all these levels? Like, is this the target? Because if that's the case, look at the distance between here to here, and look at the distance between here to here, and then look at the distance between here to here, and then here to here. Like, they're all so different. And so what happens is you guys will start to have smaller targets, larger stop losses, and you end up just becoming super confused within the markets. And I've been in this boat, guys. I have been in this, in this phase where I'm just drawing every single area where price pivoted to. I'm drawing every single area where, if we look back at our support and resistance video in the bootcamp, which was earlier on, we're just drawing any type of support and resistance. But then I started to realize something, right? And it's not just me who does it. There's many other traders out there that do it. But this is what I just came to realization. And, other traders, they probably also know it as well. But news and banks and big traders, they don't like these random, for example, 1.06821. Like, no one likes that number, right? Even like here, like this 1.05395. That's so hard to remember, right? Like, imagine you had to memorize all the levels where price pivoted to. Like, this would be hard, right? So I started to see and notice a pattern that if I just remove everything, okay, and let's just hide the markets, right? I'm just gonna put a line of where the market is, put like a little area right here. This is where the market is, just to let me know. Let's hide the actual markets, okay? Let's hide it. Market is here at the moment. Okay, let's draw in a scale, or let's draw in lines towards a scale. Now you can see on the right hand side, it's actually done it for me. We've got 1.04, 1.045, 1.05, 1.0455, 1.06, 1.065, 1.07, right? And so that is basically round psychological numbers. Now my chart's already done it for me, but let's say it didn't. Let's say it's like this, right? And so now you got 1.05, 1.052, 1.054, 1.056, right? Now it's completely different. How do we find round psychological numbers? Now remember, guys, I can't see the chart, okay? And yes, I'm an experienced trader. Yes, I do know levels, but we're just doing this for the sake of this video, right? And I'm going to start drawing out lines, and then we're going to show you the charts. And I want to show you the power of psychological numbers, okay? And round psychological numbers, actually, okay? So first thing first, price is near 1.05. Let's just draw that out, okay? So horizontal line, 1.05. Let's put it exactly at that, okay? 1.05. Now, after 5 comes 6, right? So let's go look for 1.06. So I'm just going to clone this 1.06. Okay. What comes after? Oh, I did it lower. There we go. What comes after 6? 7. Okay, let's do 1.07. Okay. Now, what I like to do is I like to do this. Okay, a key little tip for you guys. Okay, wherever price is, go one up. Okay, so for example, we know that I'm gonna go one up from here. So for example, this is where price is at. Price is at 1.05. We're gonna go one up. So always go one up and one down. Okay, so this is not necessary. 1.07. I'm just gonna have it there because it's on the screen and I can see it. Okay, and then obviously what comes before 5 is 4. 1.04. Okay, and for other currency pairs it will be different. It's not always going to be 1.05. For example, for gold we'll have 20 2000, right? 2100, 2200, 2300, 2400, 2500, right? 26, 27, 28, and so forth. For Bitcoin, a little bit different. It will be, 50,000, 60,000, 70,000, 80,000, 90,000, 100,000, right? And so it is just different. You just have to know what the round numbers are for each. And it's just simple, just knowing what is a round number. Anything that has 0 at the end of it. Simple, right? And if you ignore the last number, you can actually see this is 500, 400, 600, 700, right? So every time you see this, just ignore the last number, okay? And so now that we've got this, we're gonna now unhide the charts, and I want to show you this. And before I show you this, I want you guys to understand, right? This right here changed the whole game for me, because once I realized that price is like train tracks, and like once it's in this channel, it's gonna bounce in this channel. Once it goes to the next, it's gonna go to the next channel. And this is like a ladder, right? So just before I show you, for example, if price is here, it's gonna go here. If price comes down, it's gonna then go back up here. If it goes up, then it's gonna go down here. And if it's gonna go up, right, then it's gonna go down here. And you can see that that forms that uptrend. And it's just like, I don't know, guys, how amazing it is when, as a trader, when you start to see things line up. It's like, it's so amazing. Okay, it's so satisfying when things line up. But here we go. I'm gonna show you guys, okay? Straight off the back. And bearing in mind, guys, like, I need you guys to understand, right? Yes, I'm an experienced trader, but I didn't force these numbers. These numbers didn't just come out of thin air. This is round psychological numbers. These are numbers that hold weight, okay? And I'm going to show you. Straight off the bat, 1.04, well, would you look at that? We had some sort of rejection at 1.04. Okay, maybe it was fluke. Next level, we draw an area because obviously we have more than one time price gets to that. 1.05, okay, push to the upside, push to the upside, push to the upside. Oh, again, another push, another push. Okay, break, retest. Okay, retest. Yes, it didn't respect here, but it's clearly respecting here, right? Interesting. Okay, we're lucky twice. Okay, let's go again. Wow, look at that. Again, 1.06, right? Price came down, broke retest, and came back down, right? Okay, let's see again. Another area where a lot of traders bought at 1.07. Okay, they bought here and they sold here. Okay, wow. Are we that lucky, guys? No, we're not that lucky, because this is round psychological numbers. And the reason why it's just so funny, and the reason why it's so satisfying, is that you don't even need to see the charts to find support and resistant areas. Like, I did not look at the charts, and this is what changed my game when it came to the markets, because it's like, I used to ignore the side, right? I used to ignore the price. I used to just look at price action. I used to look at technicals. I used to look at the market, the candlesticks. But when I started noticing price and correlating it to the market, I was like, wow, like, there is a reason why it pivoted from here. And there is a reason why it, stopped here. Again, look, even here, I can bring it up and show you 1.08, right? Let me show you 1.08. And look at that, guys. Like, yes, it won't be exactly at the point, because obviously if it was exact, right, everyone will just know the levels. But it respects these zones, these areas. And key tip, right, if you're drawing supply and demand zones, always draw zones, not lines, right? If you're drawing lines, change to zones because price doesn't just go exactly at that point. It's going to go around that area. So making sure you have that area in place, for example, what we've done. And this has just made analyzing the market so much more easier, right? We now know that we're in a downtrend because we went from 1.08 all the way down to 1.04. And now all I'm waiting to see, okay, price has gone down, retested, gone down, retested. Okay, cool. Most likely we're going to see price go down. Now what I'm going to do, I'm going to scale in and actually have a look. Okay, cool. See that we formed a double top at the zone, right? Which I will show you. Right, we have formed a double top right here, right? Double top at this area, okay? Okay, a little bit of a confluence, not the best confluence, a little bit of confluence. We have an inverted hammer, okay, and we have a bearish engulfing candlestick. I don't even need to know the colors because we know candlestick patterns, right? And so what I'm going to do is I'm going to wait. I'm going to wait for price to break this level here. Bear in mind we're in the 1 hour. And what I'm going to do, because I've seen rejection on a higher time frame, price is clearly rejected. And if you look on the daily, you'll see price has clearly respected this 1.05, right? Clearly respected. We are selling, right? What I'm going to do is I'm going to wait for price to break this level of structure. And then, because I know that every time price goes from this channel, most likely is going to tap into this channel, right? And possibly even to the next channel, which will be 1.03, which I'll mark it down. Okay, so now, not only have we got targets, we know exactly where price could be heading to. We know exactly that price attempted to go there, it couldn't. So most likely it will now go to that level. We know that we're in a downtrend because of these channels. We know that price is going down because of a double top. I can even slap in my SMMAs or moving averages. See, we are having an inverse of the smooth moving averages, but what I'm expecting is price to crash down, break this level, right? That means we're breaking all areas. Moving average kind of sweeps like this. This moving average goes a little bit more steeper, and then we enter right around over here. Okay, so we're not gonna be full force on this trade because anyhow price could easily go to this level right here. But what we do know is targets, round psychological numbers. Number two, what we also know is we know that if price rejects on a higher time frame at this level, we know that price could potentially be going to the downside. If price is bouncing up or has a push through, we know that the next target will be here. Okay, and so understanding round psychological levels. Now we're going to take this to the next level, guys. Okay, next level, and this next level is even better than just these round psychological numbers. Okay, and I'll show you. Now what we're going to do is just within this channel, I'm going to add a mid level. Okay, you don't have to do this, but it's even better to get, sometimes you miss opportunities, you can enter at a mid level. Okay, 1.045. Look at how it respects, guys. Like, you know what is so nice about markets is when it is so precise like this, like when it taps nicely like that, right? And so we just get like a nice push like this. And let me actually put it maybe as not this. Like, nope, I just want it clear. Can I have it clear? Let me just remove it. Style, let's get an arrow, let's get line. There we go. There we go. Look at this, guys, right? Another one. If I actually scale to a higher time frame, you can actually see. Look at another one. Look at that, right? Twice price has bounced off our mid-level. And even if I drew a mid-level here, again, mid-level is in the word, the middle point of two channels, okay? Look at this, guys. Look at the way, like, guys, I really can't stress this enough. You miss this signal, no worries. Price comes here, retest here, you can sell, right? Again, right here, you missed this sell. Okay, fine. We can see that price came, retested, and then we actually have a better level where we can say, okay, cool, price is tapped into here, right? Meaning that price just attempted to go to this level, right? So that means this level is very much respected. And therefore, not only do we have 1.05, we also have 1.055, a mid-level, okay? And so, yes, the market does now look very, very confusing. But guys, when you break it up to levels, where it's like, okay, cool, we break it up from channel to channel, and let me just put this as consolidation like this. Okay, if we put it as level to level, you can actually see that each level has its own little movements in there, which we can trade, right? This one was pretty quick, right? And then down here, you can see that it just went all the way down, right? And it's done this. And then now we're at a level where it's now coming up. This one's did kind of not respect it. We have an anomaly, but it's still respected on higher time frames. I can go on the daily time frame and you can clearly see respected, right? And so all I'm trying to do with these yellow boxes, guys, is I'm just trying to make you visualize these channels. You don't actually have to have these yellow boxes in here. If you guys can already see it, very, very good. If you can't, no worries. You can always just draw areas around these channels to make it visually so that you can actually see. Again, like I can show you another mid-level right here, right? 1.065. And it's like, guys, I don't even know how many times I can show you this. Like, this is not scripted. This is literally price action to its finest. Like, I physically can't make this up. Like, go ahead on your charts and actually try this for yourself. Like, the day you see this is like now, you're not actually getting Vasarded for all this little support and resistance, all these little ones. Like, you're not getting Vasarded at it. You don't get faked out. You don't get Vasarded off these little small price actions. And you look at the bigger picture and you understand what the market's doing. Okay, so like for example here, we see that price rejected really, really well at 1.04, but a lot of traders are going to be like, this is a level of support, like down here. Whereas no, not really actually, it respected 1.04, right? In order for it to hit 1.03, it has to now, crash through 1.04. And so now you are able to build that narrative, and now you understand the markets, and now you understand how the markets are playing, and now you understand how it is, right? And so when you put everything together, candlestick patterns, chart patterns, support and resistance zones, or key psychological areas, right? Then you have your moving averages, your fib levels, right? Once you have all of these in place, your setup has just gone from a C setup to an A plus setup, right? Why? Because now your analysis is clear. This analysis is so clear. I'm just going to go on the weekly time frame. It's so clear, guys, that I can scale out all the way back to 2023, right? Last year, a whole year ago, when price was at this level, and it has, like, guys, I cannot make this up. Like, look at the way it's respected. 1.05 respected, 1.055 mid-level respected, right? 1.03 respected, like really, really nice respected levels, right? And we're talking, this is all the way back in 2022, guys. Like, this is 2022. And I think I've said enough about round psychological numbers. If you are not trying this for yourself, please, please try this for yourself, because you're going to realize that number one, you're going to have way better entries, because now you're entering at a level where all the big banks, all the high retail traders, all the investment traders, all the hedge fund traders, everyone that has a lot more money than you are looking at these levels. Not only that, you get to find targets. You're not targeting, for example, if I was buying here, let's say we bought, I'm not targeting the next high, which is here. I'm going to target the next key level, right? And in case you guys don't realize, this is 50 pips. This right here is 50 pips. So if Euro USD moves a little bit slow, but let's say I'm targeting, this I went for a buy, right? And I'm targeting, like, let's say this high right here, and my stop loss was obviously, let's say, below this channel, or let's say we don't even know what the channels are. Let's say it's tight over here. I'm expecting 134 pips, right? But The reason why this is not realistic is because look at the way USD moves, right? On a daily basis, it's taken 2 days to move a channel. Okay. So why would it move in like within your trade, right? To go from 1 to 3 channels, that means it was going to take 6 to 7 days. Why do you want to hold a trade for 6 to 7 days, right? Especially if you're a day trader. So now you understand, okay, it's taken 2 days to move from one channel to the next. Okay. Also, it's just skip through 3 channels, right? Okay, let me look at psychological numbers now. Let's see my trades with psychological numbers. So same trade, psychological numbers. Stop loss below the moving average. Take profit. 1, nice 1 to almost 3 risk to ratio. And 2, nice 1 to 5 risk to ratio. Because I know that, okay, it might take a day for it to get to this level, but it's fine because I'm a day trader. I can hold this trade, take some profits, and then see what it does to the next level and do the same thing. So I now know that for me on a daily basis, I should be expecting 50 pips on Euro USD, not 134 pips. And that's why you guys keep losing, is because you guys are expecting more pips than the actual currency pair can give you. And so that's why you keep losing. So now psychological round numbers have helped you understand that. Not only that, the trade itself is more realistic with its targets, and also now you know where to enter and where to sell. Okay, you now know the area of interest. This is pretty much it, guys. Like I can't stress enough. Like you guys would have entered like anywhere between this candlestick and this candlestick for a buy, and then it's like you just missed out on, you know, all these traders over here that's going to take away the trade and then obviously make the price go down a little bit, right? Whereas you could have waited for here, have a better trade, have a better stop loss, have a tighter stop loss, and you can wait for price now to continue to go up, right? Same thing with Bitcoin. I did this analysis with my students as well on my Discord server. If you guys are not in my Discord server, make sure you click the link in the description below. Join the Discord server. We are trying to grow a community here, guys. So if you want, even if you don't, you know, have any knowledge in trading, hop on. We're trying to help each other out. We're trying to help each other reach our goals, reach our journey, and become the best trader we can be. And so make sure you click the link down in the description below and hop on that Discord server. And by the way, guys, after the bootcamp, the Discord server access will be closed. So right now we're having all of you join. Once the bootcamp's over, which is at the end of this year, the Discord server is closed. So make sure you're aware of that. Okay. And so looking at Bitcoin as well, right? You can see that price almost hit 100K, didn't, right? I even put this on my Instagram live stream. I said, look, price is going to get so close to 100K, but it's not going to hit. Why? Because everyone's TP is at 100K. Why would price be so easy for you? No, it's not, right? And so therefore, price hit 100K. Where is it going? Well, I said to myself, okay, if price is going down, first psychological number, 90K, right? Boom, 90K, right? A little bit different to Euro USD now, right? A little bit different. Why is it a little bit different? Because the units are different, right? At the end of the day, this is a graph. This is the time. This is the price, right? This is a time to price graph. Usually in school, you learn it the other way around, where price is on the left side and, you know, it's like an L. Well, in the market, it's a little bit different. It's like an upside down, the reflection of an L, okay? But it's the same process, same thing. When you're in school and you learn how graphs are, you got, you know, the units on the side and the time on the bottom. It's the same thing. Look at the units, right? Because you're not going to go with 1.05 on Bitcoin. You're going to go for whatever units is showing, right? And so 90,000. Okay, price could hit 90,000. Okay, if it goes below 90,000, where's the next target? Okay, 80,000. Okay, cool. After 80,000, where's the next target? Okay, if price continues to go down, I think the lowest it can go is, after 80,000, is around maybe like, you know, 70,000, right? But this time I have a mid-level. Why? Because look at the way the mid-level was respected. Even though it's not super duper close, it's still respected at this mid-level, right? And so you start to understand where price is. So when price is going down, like right now, Bitcoin, everyone's going to be scared because it's like, oh, I'm losing money. But in reality, it's just retracing. It's going to go up. It's going to hit the 100K. It has to hit that target, but it's going to take some time. It's not just going to fly rocket high like it did here, right? Where it went from one channel to the next channel to the next channel. You sometimes have to wait for price. And even with gold, a whole different level. And you're going to see with my analysis, we always have the same thing, guys, the same thing where we have around psychological levels. Guys, I wouldn't be teaching you things that I don't personally do. I do this, and that's why I'm showing you. And so I am so confident that once you slap in these numbers into your charts, once you start practicing, you're going to start to realize that actually key levels are so important, and it changes the game when it comes to you and your entries, your targets, your stop loss, your bias, the way the market's going. Everything just changes. The way you view the markets has broken down, because without this, right, let me just hide all my drawings. Without this, it's like, what's going on in the market? Whereas when I unhide everything and I actually scale in, we can clearly see, okay, price went from, all-time high, which is almost 28,000, all the way down to around 27, right? Okay, cool. 27, then it went down to 26, and then it went down to the mid-level of 25.75, right? Or actually 25.50, right? 25.50. Okay, then it went up, all the way up to 27.25, which is a quarter level. Okay, cool, which is almost near the 2700, right? And then it goes down all the way to the mid level. Beyond the mid level, it goes to almost 2600, sorry. Okay, so now you can break down the charts and understand that. Whereas before, it's like, I don't even know what price is doing, what it was going on. Like, for example, a lot of traders are going to sell here, but in reality, this is actually a cheap price for buyers. Why would you sell? You could buy, even though there's a big bearish engulfing, which most likely it will sell off. This is just an example that I'm showing you. I actually don't know exactly what gold's doing right now. But if I had to analyze, and let's just say on a buyer's point of view, this is a cheap price for buyers, right? Because last time they bought was at 25.50. Now it's at 26. So it's like, why not, right? And so you can break down the price levels and you can explain it to yourself. And also, now when you are looking at the markets, you see, okay, price is at 20, almost near 2600. Okay, cool. I'm going to wait for price to get to 2600, then I'm going to place my trades. So now you're also stopping forcing horrible trades in the market. You're stopping that. Why? Because you're waiting for price to get to these round psychological numbers, because those are your area of interest. And that's pretty much it, guys. When it comes to psychological levels, I think that's pretty much I anything to do with supply and demand or support and resistance, fair value gaps, all of that's the same thing. That's pretty much everything to do with that. So now what you can do is plug it into your charts and forever have it there. And you will never need to change these numbers. These numbers are there forever, right? Because they're round psychological numbers. They're areas that's always going to be respected. And so use this, guys. Homework for today: plug in these psychological numbers, back test it, look through the history, like literally with, like, for example, Euro USD, right? Look beyond, like look back 2023, 2022, like look back. Does it respect? If it doesn't, remove it, right? If it does, keep it. And so then what happens is you understand the market, you understand how it is, you understand how it goes. Is that cool, guys? So please, please, please do that for your homework. If you are enjoying the bootcamp, make sure you like this video, make sure you subscribe, make sure you tell your friends about this bootcamp. We are helping many traders out here, and also it's completely in the comfort of your house. It's not like you have to go through a whole different. It's on YouTube, everything's completely free, and you get to just watch this in your own time. So make sure you go tell your friends as well, so that they can also hop into the markets, make some money with you. The journey is much better when you have friends along. And if you guys, are a lone wolf, like how I used to be, hop on the Discord server, make some friends, and enjoy making money in the markets and enjoy with other people in the community. And we all make money together as well. So, guys, that's pretty much it with today's bootcamp video. Hope you guys enjoyed. Hope you guys learned. Please plug in everything that I'm teaching you and actually try and use it. And that's pretty much it. And I'll see you guys tomorrow.